Good day, learners. Welcome to Act 212 class. My name is Mr. Joshua Olaniyan. I'll be taking you through this course. This course will be starting with manufacturing accounts. In the process as well, we'll look at some other topics that relates to accounting for non-profit making organization, accounting, single entry and not incomplete record, and others. But today we'll be looking at the study session one which centers on manufacturing accounts. When we talk of manufacturing account, it is peculiar to a manufacturing concern, that is an organization that is involved in the production of goods, and before they forward it or before the goods are being forwarded to those who will sell and distribute. So a manufacturing organization is usually involved in more functions compared to trading concern that merely buy finished goods and sell it to customers. The manufacturing organization purchases raw materials, acquire labor services and other inputs, and convert the raw materials to finished goods, unlike the trading concern which only purchase finished goods and sell to perhaps the direct consumer or the intermediaries. The manufacturing organization engaged in other functions like purchasing raw material, processing the raw material, or converting the raw material into a finished product. So the major difference or the principal difference between a trading and manufacturing company is the process of determining the cost of goods sold. The manufacturing concern, the cost of goods sold usually comprises of the various cost components which we are going to see as we go further in the study. So at the end of this session, you should be able to understand the following. You should be able to understand or define the manufacturing account, as well as be able to identify and explain the key terminologies associated with manufacturing accounts. As well, you should be able to understand or determine the various components of total cost of production. When we talk of cost of production, what are the things that make up the cost of production? Then finally, you'll be able as well to prepare a manufacturing account. So I'll first of all do a run through of the basic things you may need to know in this topic. Then I come back later to do a workings of, or to give an illustration of a typical manufacturing account. Now let's get started. When we talk of manufacturing account, it is an account. It is an accounting statement prepared to ascertain the cost of goods produced in a given period of account. That is, the essence of the manufacturing account is to ascertain the cost of goods produced in a given period, and that manufacturing account usually shows the various cost components. When we talk of cost component can actually be divided into three. We have what we call the material cost, the labor cost, and the overhead. Let me give a brief explanation of what we mean by this cost component. There's no product that you will produce that you will not incur these three costs. Let's talk, for instance, you want to produce, for instance, let's say you are producing a shoe. Now, for you to produce a shoe, you may need to get a material, because you have to go to the market to purchase the leather, to purchase the sole, to purchase what have you that you will use to make the shoe. Now, the cost you incur in purchasing all the materials that are needed to produce that shoe are the material cost. Having purchased the material, you should understand that the shoe will not just form itself because you have the material. You need a personnel to convert or to process that material, to join the materials together to form a shoe. So you need a personnel, perhaps a human being, a worker, to do all of those. So the cost, the amount of money you are going to pay that individual who works on the material to make it a finished good, it's the labor cost. You may hire a shoemaker, you may hire a cobbler, what have you, to help in the sewing or in the making of that shoe. Now, having incurred the material cost, the labor cost, that is the personnel that has to work on the material, you should also understand that the personnel or the labor will make use of some other thing. Perhaps he may need electricity, perhaps he may he may need electricity, so to say, or he may also be working in a factory where you may have to pay the factory rent and all of that. Now, the costs that are also associated with the electricity or the factory where the person is processing that raw material to finish good also has some costs. So those are overhead costs. So before you can have a final product, so to say, you must have incurred a material cost, incurred a labor cost, and as well an overhead cost. So that's why we refer to these three things as the cost component. That is, no product that you are able to manufacture that you would not incur these three costs. Now, this cost component can further be classified into two. We have what we call the direct cost and the indirect cost. When we talk of direct cost, these are costs that can be directly traced to the cost unit. When we talk of cost unit, we are talking of the product or an item that you produce. So direct costs are costs that you can directly trace to a particular product, or that you can directly trace to a cost item. And examples of direct costs include direct material, direct labor, and direct expenses. When we say direct, it means you can specifically measure, or you can specifically trace the exact quantity or the exact amount that you spent on the material, on the labor and expenses in producing a particular cost unit. Then when we talk of indirect costs, these are costs that cannot be directly traced to cost unit. For instance, you may not be able to trace the amount of electricity you use in producing or manufacturing an item. You may not be able to ascertain or divide the salary of the factory worker to a particular cost unit. So examples of the indirect costs include foreman salary, depreciation of factory plant and machinery, the factory rent, factory repair, insurance of factory machine, and whatever. So these are costs that you cannot measure the direct amount you expend in producing a particular cost unit. Now, in manufacturing account, we have various terminologies that are used. We have what we call the prime cost. When we say prime cost, it is the summation of all direct costs. In the previous slide, I gave an example of direct cost. That is, we have the direct material, direct labor, and direct expenses. So the summation of all of these direct costs is what we refer to as prime cost. Then there's another one we call production or factory overhead. So also we have the indirect cost, the summation of all your indirect cost, that is cost that cannot be directly traced to a cost unit. The summation of everything is the factory overhead or the production overhead. Then next is the total cost of production. The total cost of production is usually the prime cost plus the overhead cost when you have adjusted for your work in progress. Work in progress actually means goods that are partly completed, that you can neither classify as raw material and you cannot classify them as finished goods. So they are products that are partly finished or that are partly completed. So when we talk of your total cost of production, is the summation of your prime cost plus your factory overhead, then with the adjustment after you have adjusted for your work in progress. You understand this better when we go to the illustration aspect of this topic. Then another cost is what we call the conversion cost. When we say the conversion cost, it is the cost that you incur in transforming the raw material into a finished goods. So from the word conversion, the cost that you incur to convert the raw material to finished goods. And in most cases, the conversion cost is usually the labor cost and the overhead cost. The labor cost and the overhead cost is what made up the conversion cost. And lastly, we have finished goods. Finished goods, these are items which have been manufactured and are ready for distribution and sale. So these are the various terminologies that we used in manufacturing accounts. Now, this is how a typical manufacturing account looks like. In preparing your manufacturing account, it is important that you start with perhaps the direct cost, and in ascertaining your direct cost, we have what we call the direct material. So you have to start with your opening raw material. When we say opening raw material, these are materials that you carry forward from the previous manufacturing period to the current manufacturing period. And if you purchase additional raw material, you add that to it. Then if there are costs, that is the carriage inwards, the expenses or the amount you incur, the money you incur, the expenses you incur rather, in transporting the raw materials from perhaps the market to your factory, that's what we call the carriage inward. So all of this you have to sum them together, then you less the closing raw material, that is the raw material that you did not use for that period, you deduct that. So the summation of all of that gives you your direct materials. Then you had all other direct costs, which include direct wages. Example of direct wages may be wages of the people that work in the factory. If you are operating a unit cost system where perhaps the worker will be paid on the basis of units that they produce. So the summation of the amount you pay to those who work based on maybe the output of what they produce, we call that the wages. Then if there are direct expenses as well, like your royalties, as you include that, then the summation of all your direct expenses, that is the direct material, the direct labor. Direct labor could also be substituted for direct wages, direct labor and direct expenses. All of these together, as I earlier mentioned, are what we call the prime cost. Then you had your factory overhead. You can see the list of factory overhead: electricity, factory electricity rent. It is important for you to understand that factory overhead are expenses that relate to the factory and do not relate to perhaps the office. In a typical manufacturing question, you will have electricity that is both electricity expenses that is both incurred by the factory and, for instance, let's say for administrative purpose, the office. It is important that you divide or that you apportion the expenses perhaps based on the percentage given to the factory and to the electricity. So any expenses that is incurred for selling, for administration, for distribution purposes are not included in the manufacturing account. The only expenses that are recorded or that are included in the manufacturing account are expenses that directly or that are related to the production or to the manufacturing of the cost item. So we have the factory electricity, factory rent, depreciation of factory plants, depreciation of machinery, depreciation of loose tools, and all other related factory overhead. I earlier mentioned as well that you have to adjust for your work in progress before you arrive at your production cost. So the work in progress, you have to add your opening work in progress. Opening work in progress means the partly finished goods that you couldn't finish in the previous production process that you are now completing at this present one. So you add that to the cost of what you are producing already. Then you deduct the work in progress that you are producing, that means that you have done in the current production period that you could not complete. That will also be deducted from the current manufacturing account, so as to have a balanced production cost. So from this layout, you should be able to prepare a manufacturing account of a manufacturing concern. So in the next contact, I will be giving an illustration of a manufacturing account, giving a question and solving the question at the same time. Thank you.